Welcome everyone to this webinar and thank you for joining. My name is Michael Vroeven and I'm part of the Operational Transfer Pricing team of Quantera Global. Presenting with me today are Jonne Krechting, Tim van Uden and John Bruins. Jonne was responsible for Operational Transfer Pricing at Teva Pharmaceuticals and is currently Transfer Pricing Lead at Grand Vision. Tim and John are part of the Advanced Tax Group, with which we work intensively together in the field of operational transfer pricing. We have multiple perspectives to the topic today and aim that after this webinar, you have an understanding what operational transfer pricing entails and how you could start to review and improve the process at your own company. Next slide. Our agenda for today. First, we will explain what operational transfer pricing is, why it has become such a hot topic, the benefits, and which steps you could take. Then Jonne will share his practical experience and insight into operational transfer pricing processes. Thirdly, Tim and John will zoom in on the technological background and possibilities. And then we will share our key takeaways, and Tim and I also have a special offer to start your operational transfer pricing journey. If you have questions throughout the presentation, then please feel free to ask these via the comment box, and at the end of the presentation we will answer these questions. Or if time does not suffice, we will get back to you separately. So, what is operational transfer pricing? A lot has been written on this topic and definitions differ somewhat. But from our perspective, it comes down to the practice of all what is necessary for pricing of individual intercompany transactions, to accurately reflect transfer pricing policies in the administration and financial results of parties. If we then translate it back to the operational transfer pricing cycle that we have depicted here on the slide, first, your strategy and design should be in order. Secondly, it is important to establish which data you require to be able to execute your transfer pricing policy correctly. Find out which sources you need and how the data can be extracted efficiently, ideally to a central transfer pricing engine. Data can come from multiple types of sources, from financial reporting and managerial reporting, which increases the difficulty. Thirdly, you should establish and implement the analytics and processes to be able to apply your transfer pricing and ensure that it is correctly processed in the administration and financial results. Then the governance around it should ensure that the process mitigates risks in line with the company's strategy and that there are clear roles and responsibilities. Monitoring should subsequently be in place to, on the one hand, ensure a correct implementation, and if, for example, new finance colleague joins, costs are still booked on the same line item. On the other hand, monitoring should be in place to be in touch with the business and identify potential developments that would require an update of the transfer pricing policy. Well, often technology is used to support these processes, and this is not a prerequisite, but a way to save time and costs and professionalize, of course. In addition, often change management and training of colleagues is required. Whereas more traditional transfer pricing advisory often ends at, for example, a report or policy design, operational transfer pricing is aimed at the end-to-end process. This means that it goes down to booking line items and generating and settling invoices. This also means that alignment with various departments is required and that decisions should also be considered from multiple perspectives. If you would, for instance, change the intercompany price of a stock keeping unit, this may trigger VAT and customs discussions. On the business side, it would impact the cost price of a product to which, for example, gross margin targets may be linked. Eventually, you may state that you obtain gradually more control as the level of operational transfer pricing processes you have arranged increases. You may ask yourself, how much control do you wish to have, and which level of risk do you accept in this respect? Next slide, please. Well, why now? This is due to the mix of factors that mainly in combination triggers the need for operational transfer pricing. So, in the past 20 years or so, we have seen a strong development from tax planning towards compliance and controversy. Compliance requirements have increased immensely, and as such also transparency of positions. Due to the automatic information exchange between tax authorities, consistency has become even more important than in the past. Basically, this means that if you don't act at arm's length or are not having a consistent storyline that can be backed with relevant financial figures, you are likely to run into a difficult audit at some point in time. This is also what we see happening in our practice. Then, as enabler, technology developments have enabled advanced audit selection by tax authorities on the one hand, and on the other hand, of course, also provide the opportunity for taxpayers to improve their compliance and efficiency in the related processes. More internally, we see a lot of pressure on tax managers for which the workload increases each year, but that receive no or limited budget for additional resources. Better processes or automation are as such required to still cope with this increased workload. Next slide, please. Thank you. What is in it for you? This also depends on how far you are in the process and if you also use automation, but in general, the benefits are that it allows you to focus on what you're good at and like. So, repetitive work and data gathering is automated or captured into well-defined processes, which otherwise eats up a lot of time. And I personally still have to come across a tax manager that enjoys repetitive work. You can be comfortable also that consistency is arranged, and you, in that sense, also avoid the risk of human error and Excel hero dependency. You also reduce year-end adjustments, for example, cash leakage on customs, and you obtain real-time insight in positions, which basically enables you to proactively manage risks. Additional benefits, more insight and possibilities for collaboration, scalability once you have set up the processes appropriately, process controls that are traceable and auditable. And because of all of this, when a question comes from a tax authority, it will be a lot easier to answer such question and have insight on potential scenarios. Next slide, please. What could be a step to take? Jonne will dive into his experiences a bit deeper, but it all depends heavily on the size and complexity of your organization, the transfer pricing system that is in place, and IT landscape. An initial step could be to explore the processes in place and fix key risks or time leakage, and ask questions as what is already available, who are the key stakeholders, what data is required, in which sources is this data available, which processes are already in place, and what goals do you personally have, and what will be important for the company as a whole. And likely, if you would analyze this together, we would identify a couple of key risks and opportunities. And once you have established this basis, which is basically the core of operational transfer pricing, so the processes that come from your transfer pricing system to the results in your administration, a next step could be to automate. A small step could already be to improve the spreadsheet you may have, and another approach could be to see, for example, which steps eats up a lot of your time and have a high repetitive character, and only automate these steps for now and go from there, or just be happy with the additional time you have. Then moving on to Jonne. Jomme, what are your experience on how to start with such process? And could you provide insight into a typical in-house operational transfer pricing flow? Jomme, I think you are still on mute.
Still on mute.
Yeah, thank you.
That's another best practice in webinars. Hi, Michael. Hi, everyone. Your questions, if what would be a first step to take, and if I could provide an example, that's exactly what I was planning to do here today. Let's take one step back, though. The concept you mentioned already, quite a few things, quite a few items there. Essentially, we're saying the goal of operational transfer pricing is to ensure that your policies and guidelines are reflected ultimately in your statutory numbers on which you need to have your compliance processes. And the goal is, of course, that your end results are at arm's length. However, if you just started preparing your documentation, this is not something that automatically happens. So the bottom line, I think, where to start, I think operational transfer pricing exists already in an organization, whether you think of it implicitly or explicitly. How to improve it, that's then the other question. So, but I think to how to improve it is you need to look at it more as a financial process. So then maybe the question, what's the first step, is thinking, why do I need to have an explicit financial process for operational transfer pricing? Of course, depends on the complexity of the organization, the complexity of the intercompany transactions, etc. But either way, it's a good practice to define and document your financial processes for compliance purposes, right? Think of an allocation in a service transaction. You need to show locally how that allocation was achieved. So somehow, somewhere, there must be a allocation model or calculation Excel file. Back to the process. I think in general, for transfer pricing, you see kind of a standard, irrespective of transaction, kind of a standard process, right? Set up your transfer pricing policy and your transfer pricing documentation. And from that, you identify the intercompany transactions. You go on to setting the relevant intercompany contracts, and with that, first line of defense in any transfer pricing audit is done. But there's no guarantee, as I mentioned, for achieving your arm's length results. So you need to go on. So just before the book year starts, you determine the price, your intercompany price setting, your transfer prices. You will do that. Most companies will do it based on budgets, forecasting, whatever. And then during the year, you're generating the invoices and generating the transactions related thereto. And of course, it's good practice to monitor those to see if you're within arm's length. Then at year end, at closing the books, you of course need to ensure that you have your arm's length results in the books. And maybe you need to ensure, there's an additional process for larger M&Es, that your CBCR, that your CS demonstrates more or less your transfer pricing structure. And then a few years down the line, most likely you will need to, there's a chance that you will need to defend those results in the tax audit. So, that's just to demonstrate, that there's lots of sub-processes across departments involved in this, which you already mentioned, Michael. So now from there, let's bring it down to kind of a more simplified example that I have observed in my experience, but I'm sure is not unique to to me. So if we could move to the next slide. So yeah, what I kind of want to show on this side is a pretty generic operational transfer pricing interaction. This is during the book year when you're monitoring the transactions. Following a period, you will see the local, let's call it this, by the way, an LRD model, where you have a limited risk distributor adjusting its results with the residual profit owner, the intercompany party. So at the end of a period, the LRD needs to check, given the transfer price already set, whether it's still within the interquartal range or at arm's length margin. So what the LRD does, collecting the data, could be simply sitting in the P&L. In my experience, it was a little bit more complex because there was a differentiation between stock keeping units. So we needed stock keeping units, net sales data plus some metadata to differentiate that. So there you see, by the way, already what you mentioned earlier, Michael. As the organization gets more complex, a company gets more complex, the complexity of your operating transfer pricing processes can increase drastically as well. Either way, local distributor collects the data, uses that data to prepare calculations and share those calculations typically with some sort of review body, 4 eyes principle, etc. The review function then collects the transfer price calculations from the LRD. In case it's one LRD, it's quite straightforward, but most multinational and enterprises will have multiple of these, so they collect the various calculations, they review the files, the correctness of the data, first of all, the correctness of the file, are there no broken formulas, what's wrong with data format, etc. And then there needs to be a review based on the transfer pricing, well, let's call it standards, and by that policy standards. For example, are there any costs included in a physical product flow calculation that may relate to different transactions, for example, the sale of intellectual or sale of assets or intellectual property or something like that, which of course should not be taken into account to test the arm's length of an LRD. So, or more simple, is the margin used in the calculation for the transfer price is correct. If all these steps and reviews and hurdles have been taken, you will see the calculation shared with the intercompany party or the residual profit owner, who will typically have a few of their own reviews. As the residual profit owner incurs the P&L effect of any calculation, and then accepts the calculation, and there's an issuance, either retroactive issuance of debit or credit notes, or maybe going forward adjustment of the transfer price. Either way, there's a system element there in the ERP system. So as you can imagine from this, looking at just this very simple example, it's already quite straightforward to identify a few bottlenecks. So if we could move to the next slide. So yeah, the previous one. Yeah, this one. It's just in between. So what you see here, just to point out already, like if you look at the arrows, there's already kind of communication and alignment between the different agents involved here, right? So there's kind of a implicit approval workflow. You send Excel files back and forth, maybe an email, maybe a few emails, a few discussions, questions asked. So that takes quite some time. It doesn't have to be a bottleneck per se, but it's important to point out. at the level of the LRD, typically you will see someone preparing these calculations. Well, it could be local accounting, maybe budgeting, but usually it's one person, and that's not per se a person that's transfer pricing savvy. Could be. Either way, that person has and maintains the model kind of on itself. That's where the user dependency comes in that Michael mentioned earlier. If you look at the review function, an issue or a bottleneck is, well, the review function in case of more LRDs gets many different files, and the work is more understanding, hey, what's sitting in this Excel file, or what's going on here, and every time it's a puzzle again. And then that's not even mentioning the archiving burden that lays there. And then finally, once the model is created, once it's been reviewed, the intercompany party or residual profit owner, who has the ultimate P&L impact, is last in line to review. So they would feel maybe not so much in control of the process, but it does hit their bookkeeping process. Maybe there's a closing period closing, intercompany closing, stuff like that. So it's easy to, well, maybe not call it bottlenecks, but let's call it find frustrations in the process. Of course, that's systemic because you always need to have this interaction, more or less. But there's definitely a way to streamline it, and by streamlining it, you can achieve, well, better compliance. Of course, cost. You can work more efficiently and save somehow costs or time resources. So that was just like kind of a little example to demonstrate. Okay, think of it clearly, define clearly the process. What is it that we're looking at? Where are the frustrations, and how can we improve that? So maybe now it's fun to take you to kind of the practical experience of what I did within my organization, which is on the next slide. So a lot of text, will not bother you with everything, but I think it's clearly immediately recognizable that there's kind of a three stages here, and I think in general but that will be discussed later in the presentation. I think in general those are good stages to think if you want to move to any kind of automation or for any kind of financial process. And we applied that more or less as well. We started with very much coordinating, aligning all the actors, aligning the templates, storage locations, etc. We wanted to move to a clearly defined process, clearly defined timelines, and clearly defined documents that we are using in that process. From there on, we went to a standardization phase where we had the process was defined, the steps were defined, and now we were looking more at the tools. So we had a unified template, but we identified, okay, for every LRD, we're doing the same thing. So we're gonna do the standard check. We're gonna write the standard review document, and we're gonna implement standard controls on that. Firstly, we did that Excel. Then the Excel evolved to include macros as well. And once we were on that level, we had already more or less the components for an automated solution were already in place, right? We have our TP rule engine that were the formulas in the Excel and the automated checks. And we had our data requirements gathered that we needed to calculate that. So it was quite a easy and straightforward step to move that to a more database driven solution. And it's a little bit tricky because it's not a clear separation, but I think from moving from the standardization to automation is John and Tim will cover that in the remaining part of the presentation. But yeah, what we thought of the automation, we integrated, we created interfaces with our data systems to move that out of the hands of the user. You can think of dashboards and workflows that were set up you know, to also take a little bit out of the communication out of Excel and formalize formal controls, approval of transfer price, etc. in buttons. And then at the final stage, okay, can we link it to other functional transactions that we observe in an entity, services, for example, or contract manufacturing activities? Can we connect it to an invoicing system where updates and adjustments in transfer price are automatically processed? And can we give, once we have our year-end calculations, can we automatically have a tested transaction in our TP documentation module? So, you know, there could, with this example, I hope I showed a little bit that, yeah, okay, break it down into steps and take into account, okay, what is needed in each and every step. That's quite difficult to find out, but I'm sure that my co-presenters can tell you more about that. So with that, I would like to pass the presentation back to John, I believe.
Yes, thank you, Jonne. If we can go to the next slide. So Jonne just illustrated operational transfer pricing process, but we also see that these challenges, these process challenges, can be broader than transfer pricing. So in that way, we would like to break down these challenges and define them as a broader tax, legal, or finance challenge. What we encounter regularly are the challenges in every organization. What we see a lot is that there is limited to no automation. A lot of the work is still being done manual by professionals. What also is a big development is that there is increasing scrutiny and attention from global authorities. They're asking for more details and also more data. It keeps increasing. There are more checklists. There's more demand for documentation. The list and the amount of data to be documented grows every year. Further to that, there's also more exchange of information between countries and between tax authorities of countries. So if you're going to report in multiple countries, you have to be sure that the data you are reporting is the same at both sides of the border. So it's extremely important that this data is correct. Another development is that all of this data and all of these reports have to be produced in a shorter amount of time. The delivery timeline seems to get shorter every year. As the amount of data, as the amount of checklists are greater, but they have to be produced in less time. Companies want more insight and oversight in their data. Which data has been reported, which reports have been submitted to the tax authorities. So there's more and more need for dashboarding and more oversight of the process. The last challenge I want to talk about in this sheet is that information is still being gathered decentralized. The data does not come from one central point. It has to be gathered at many different people and different organizations and different parts of the company, and this can be time-consuming effort. So yeah, taking into account these challenges in a broader process, we can basically identify 4 process challenges, and they will be illustrated on the next sheet. So basically we can identify 4 challenges. The first one I want to talk about is the system challenges. What we see a lot is that the systems that are being used by companies are older. They have been around for a long time and are not easily replaced. Also, the data has to come, a lot of the times it has to come from multiple systems, and then it has to be combined in some sort of way to get the desired data. There's also there can also be problems with document retention. Data for finance can be stored for an X amount of years, but for tax purposes, it could be that the data should be stored longer. So then you have the you also have the lack of system knowledge because the systems have been around for some time and not everybody is used to working with them. So then you get to the next challenge, and that's the people challenge. A lot of times you see that there is a key man dependency. There is one or maybe few people that knows how to do, that knows the complete process. And it can be that the way of working has been there for a lot of years, but only a couple of people know how this works. The format which people are working with can be very specific. It could be a format created by one system which has been used for 10 years. So that brings us to the next point. If this system or the way of working will be changed, some people find it difficult. So change management can be an issue. So yeah, if you look at all the people items, you could also say that there's a lot of times there's a lack of standardization, which brings us to the process challenge. A lot of times the process is inefficient, it's time consuming, there's no oversight of the total process with who is involved, which systems are involved, and where are we in the process? Where in the workflow are we, or is the company? And if people don't know the process, then there's a chance that errors may occur. And the chance of errors brings us to the data challenge, which keeps getting more important because you need to have the complete data. The data needs to be consistent, and yeah, you don't want any errors in your data. So yeah, these are basically the 4 challenges which we identify in a typical process. And in the next sheet, we will show you the typical process. So in the sheet, we have illustrated a typical process for legal, finance, or tax. So what we see a lot is that different sets of data have to be collected from multiple systems. But there's not that there is one person who can collect all this data from these different systems. Multiple people need to be involved to get the data from the different systems. So you have multiple systems and multiple people who have to get involved. Once you get the data from the different people involved, a lot of times you will see that the data you receive has all kinds of formats. It could be Excel, it could be PDF, CSV, it could be a folder on a shared drive. There's no consistent format in the data you receive internally or externally. So a lot of times we see that people manually adjust all these data in a consistent format, and this takes a lot of time and it's a lot of manual work. And by the time that all this data and all these sources have been transformed to a usable format, by that time, it is the question if you have the latest data. Do you have the latest AAP data to work with? So that creates another struggle because, yeah, the formatting of the data is time consuming, that there's a chance that your data is no longer real time, and that frustrates the process. So yeah, so after that, after that the data is up to date and the format is corrected manually, you will see that once the reports or the data is submitted to the tax authorities, there is always a chance that the tax authorities will ask questions or perform an audit. But once that happens, you have to go back into the details of the information which you have provided. But because all of the data has been altered manually and the format has been changed, it can be very difficult to get back to the source data which your submission was created from. So in that case, an audit or questions from tax authorities can be very time-consuming and a very manual process, which is inefficient. So in that case, what we suggest is that if we go to the next step in the sheet, the next one, as illustrated here, you can the very process which is difficult to have in an overview can always be you can always have a look and reduce the challenges to one of the four typical process parts. So, for example, if you look at the data sources you need, you can see it as a data challenge. For example, the people who are involved, they are part of the process. So basically, your extensive process can always be chopped into parts of the process, and you can look at these parts and identify which part of the process this is. And once you have established insight in your process, you will see that you have structure, and it is easier to streamline the process. And on the next sheet, we will see a desire. This sheet, you will see a desired efficient process. This process has been structured and optimized, and it can look as follows. Once the process has been optimized, data is easily extracted from different systems without the key man dependency. So any colleague of your transfer pricing or your tax department or your finance department can easily get the required data. Also, you can see that the manual part has been cut out of the process. So all the data collection and rolling that up in the required format is optimized. And as a result, any audits or questions from tax authorities are completed efficiently. So because the source data is easily collected and it's very clear where the data is come from, no manual work has been performed or minimal manual work has been performed. Tax audits won't be a problem and can be handled efficiently. So yeah, that is how we see a desired efficient process. So if you go, yeah.
Yes, so from here I'll take over. Thank you, John. So we've seen a typical standard process, and also especially the challenges that we come across when we see the process at various multinationals or enterprises, because this is, as John mentioned, not only related to transfer pricing, but we also see that for tax provisioning, and we see that also for all kind of processes where people tend to use all the means that they have in house and send information through email and gather that information in an inefficient and time-consuming way. And eventually, if then somebody asks, please provide me with the information of the last 10 years, you have difficulties in gathering that information. But how do you move from your current process to that ideal and most efficient process through automation and process improvement? I think that's a question that a lot of companies ask these days, and they're rather hesitant to start because it's rather unclear how to start or where to start. So the most common approach that we see in organization when it comes to this process improvement or the steps in automation is that they're looking from data to report. So if you would translate this into a step-by-step visualization, then this overview shows you the various stations that you can choose to get on the train and get to the next step in automation. So every station in this overview has basically its own challenges, and therefore also its own approach to mitigate these challenges. And if you look from left to right, you see the station related to data and systems, integration and process, tooling and services, and on the right side you see the analytics and insights, so they're also the report part. All this terminology you have already heard during this whole presentation when it came to the theory about operational transfer pricing, when it came to the practical experience of John, and also the standard process which was mentioned by John. So we're going to look more in depth on these various stations and also explain what our vision is on how you would approach this. If we can go to the next slide. So if we follow the traditional steps in automation, then we would typically start with data, and whether this is so-called structured data like transactional systems, fixed asset data, different ERP systems or consolidation systems, or even the unstructured sources like emails, PDFs, documents, notes, and so on. I think this is believed to be the biggest challenge when it comes to automation. I think this is one of the biggest hurdles that we hear when we talk to clients on process improvement, or when they try to automate one of the processes. And the most common hurdles identified are that people don't have a clear view on what systems are in use, what data is required for the specific process that they're aiming at, what data is available from these systems, and who they need to involve to get the data in this process. So who will provide me with the information, and if the person that already provides me with that information, can he tell me where I need to go? And most of the time we also experience that people don't know what the current process is and how they can change it and set up a more efficient process, because it has been done for a couple of years. Everybody thinks it's going well because at the end we deliver, but what we deliver is not always clear. So depending on these challenges that you can identify, there are different approaches that can be used to, in this station, mitigate those challenges. So when it comes to the data part, we always like to start with analyzing the position that you're at now, and how that data in that current process is established. So if the data is clear, then we can pinpoint what items in that process might be eligible for automation or structuring. From there, we can determine what the most ideal situation and position is, so the so-called to-be state. And by comparing the current state with where you want to go, so the to-be state, we can set up a gap analysis, and that gives us a plan, or at least a starting point, if you like, to discuss with internal stakeholders and system owners where we can move from there. And once we've concluded the plan and we achieve that it's feasible or partly feasible, we can perform like a test run and see what the effects are or what other steps need to be taken when it comes to the systems and the data that's involved there. So this might seem like a difficult and comprehensive process and time consuming. However, keep in mind that this can be containerized to a specific process. So it's not that you take the whole organization. This is a process that you are either the process owner or you are the responsible person on that process, or you are the person that provides the information on this process. Basically, it's containerized to that specific process, and therefore the plan and also the discussions are streamlined and specifically well focused on this process and the deliverables from that process. So if we're looking at the second station, so next slide. A second step in the process, which obviously relates to the data and also to where the data needs to go, is the data strategy. So how do you get the data from system to report, and how can we combine various systems or export from those systems together, and in what way can we combine structured or unstructured data in something that we can use. So for example, in practice we see a lot that processes combine system data, and they combine that with data that's saved on local drives, like site calculations, all kind of things that they do locally that are only from where only the results are presented into the central process. And following to this, I think the question is, how can we make this process less time consuming for our people internally? Or most commonly, most common thing that we come across, and also relating to this, is how do we gather the various forms of data within the organization in a structured way, but also in a controlled way and without any manual interferences, because we see that a lot of people still have to do manual adjustments, manipulate the data to get anything out of it, or at least a starting point. Because yeah, whether it's CBCR data or cache text positioning when it comes to direct text or risk-related data, sending out questionnaires, gathering that data, the process around it is most of the times experienced as time-consuming and identified as more a producing process than actually analyzing the actual information and putting consequences to that information. So how we approach this is by discussing the various integration options and determine what needs to come from what system. By doing this, you can set up a flow that shows the various sources and the various data streams. And once this is clear, you can have that discussion with the system owners and process owners to see how these systems can be leveraged and whether there are parts of the process that are obsolete or need to be changed. So by combining this, for example, the data gathering with the data gathering software, or making use of data connectors like with robotic process automation or APIs in the first or second instance, then you are able to mitigate the data process challenge. So if we move to the next slide. Nart, can you move to the next slide? Sorry, one back. My screen was in delay. Thank you. So the companies tend to look for tooling and services as the golden egg for their challenges. And when investigating tooling, there's either a clear need from the process owners who perform the work on a daily basis, or automation is on the menu by a direct steer from higher up in the organization. Challenges and questions that come along with the investigation on tooling are most of the times related to, well, say, user interface. Is it easy to use? Does it do a lot for me as a provider? Or to data and systems? So how can we leverage our internal ERP systems and present the outcome to our stakeholders? Is the tool facilitating that? And also, most of the times, how will it fit in the current process, and will it disrupt as less as possible? Because at the end, we want a tool that does everything for us, but doesn't disrupt anything that we already have in place. And we want to please as many people as possible. Well, to identify the right tooling for your situation, and if you would isolate this station from data gathering and system, is to look at your current process and tooling in place. So what are the current requirements that you are covering now, and what are the requirements that you want or need to cover towards the future? By setting off these requirements against a tool or solution and validate that with, let's say, process owners, you can determine in what way the tool can facilitate your challenges. And furthermore, you can determine what can be leveraged by the tool and what potentially can be the starting point, but also can be the build-up steps towards the future. Because only by knowing what you require, you can determine what tool is relevant for your situation. So just looking at a tool without any experience on the process or any requirements categorized doesn't make any sense, because you don't know whether the tool will fit your challenges. So if we move to the next slide. So in the most ideal world that we see is that you have a process in place that allows you to have a real-time insight on all implications, positions, and risks. As Jonne was mentioning, creating the dashboards and analytics on top of that, that can help you in determining next steps or putting consequences to specific processes or data that you have in place. However, this is typically a station that's very much relying on data and systems. And the challenges that we come across here is that most of the times companies don't have a clear view on what data is already there, what tooling is already in place, and the data that's used doesn't have the right granularity to create insights. And therefore, the data itself is most of the times corrupted, dirty, or inconsistent, and it does not provide any insights at all. So if you want to like to make use of these kind of toolings, you can that can provide any insights, or you can start performing forecasting or scenario modeling. It typically needs to start with that data part, and need to have that clear understanding what you require and what you're now presenting in your models and where that data comes from, and determine that future state and how that data can be leveraged. An analysis at the end is as good as the data that's built that it is built on. And if the data is not right, the analysis is not giving you any advantage at all. This is typically a station that follows the other ones. But basically, all these stations that we've discussed relating to process improvement and automation can be a starting point. Although every station has its own challenges and ways to mitigate these challenges, we believe that you should not start with any station at all. One of the things that came back in every approach in every station is that we go back to where you are at now. John was mentioning it, Jonne was mentioning it, Michael was mentioning it. Go back to where you are now, and from your current state, your current process, current use of systems, current level of knowledge, and current strategy, you can determine where you're at that curve. So we believe that you should start with that analysis, and then once that is clear, you can put those challenges, so the 4 buckets, you can put it on top of the various part of your process, and then you can say, okay, this is a people challenge, system challenge, data challenge, or process challenge, and from here we can start up a plan where we can take steps. And what's important there is that because you already know what your current state is, you can take better decisions at any station you step into. So from there you can start, by example, with any of the first 3 stations. So whether you first want to leverage data, create a control framework on the data delivery or data gathering within the organization, or start by using a tool that complies to at least your process or control requirements. So to give an example, by using a tool that can automate the production of, for instance, local files, of master files, and centralize your documents, you can already gain time and efficiency and increase controls around your process. And from there, you can determine what are the gaps in your data and what data is needed to take the next step with that tool. So it's not necessary to start with the data challenge or knowing what your data is. You can already structure your process with controls and setting up an automated and efficient process. If we can go to the next slide. Eventually, you can move to the best possible process for your company, where you can leverage systems and make use of consistent and clear data that is centralized in a centralized repository, centralized document repository. You have no key man dependency. Everything runs through an efficient and standardized process, and it does not need a lot of process management. But again, it's not the question what the best next step is to your destination if you don't know where you are now. So start with where you are now, analyzing that, and from there establish a plan to move forward. So basically, that's the approach that we normally take. Take that current state, put these challenges on top of that, and choose one of the stations to get into, but keep a clear vision on the other stations and the other steps in the process.
Back to you, Jonne.
Yeah, I think by means of conclusion, and first let me say that the part on the technology part of this discussion, as John and as Tim just presented it, is very recognizable and very nicely put. I wanted to share some of the experiences and lessons learned, because my companies we did this internally, and we learned some of those lessons kind of the hard way, and that frustrated the project. But overall, I do want to share like a little bit more of the experiences. I saw a question coming in, what exactly we implemented. We went from an Excel-based calculation model to a database-based calculation models with previous slide still, please. With bolt-on tools, and Tim also mentioned, yeah, look also what's available in the organization. Maybe think of it wider as just operational transfer pricing, but maybe as a financial process, because we actually identified with the fit gap analysis that actually the tooling that we needed was already used in other finance process, so we're able to leverage from that. So in that sense, just applying those steps and going through the station is very can be very beneficial. Another thing that they mentioned is that came up is, of course, people, processes, and systems. I have a little bit of background in accounting as well. We initiated operating transfer pricing from the accounting department, and me and probably with me any CFO, CEO, management team think about people, process, systems, can translate it in OPEX and CAPEX. So you know, if you want to do something, you want to streamline this, you're probably going to need a good business case, and with that business case also know what the return on investment is that you can get from this, and with that you will need to identify clear project drivers and requirements. Well, that kind of brings us back to one of the first slides for us, at least in the company. It was our main line argumentation was quite simple. We see increased external transfer pricing requirements and complexity coming in. We also see that a stretch organization with complexities and peculiarities, of course, that's different everywhere. But those kind of together equal transfer pricing risks, and transfer pricing risk equals costs, audits, consultants, penalties, etc., etc. So from that was the main background from which we initiated the project, and from there we identified kind of three interrelated pillars for the project. First, to improve compliance by ensuring a few core principles in our project, in our further development of the OTP function of the OTP process. Secondly, and also important, we want to simplify standard and automate that needed to bring more transparency, and then kind of together, that would then drive again efficiency and cost reductions. And then cost reductions maybe in resources, because we use then again time that was available, not to reduce FTEs, but to focus on different transfer pricing processes and different financial processes. So we freed up compliance efforts to look at the more complex matters. So yeah, then from there, of course, you need to like technical requirements, project plan, change management, etc. That's a little bit too much for today to go into completely. But yeah, it was not a few weeks project. That's what I can tell you on this one. And maybe it seems simple, but it's, yeah, I think, you know, doing this thoroughly in the end will pay off. So yeah, then maybe to conclude, like, yeah, what are some results? At least conclude from myself, what are some results on the next slides? Yeah, what you can see here is basically, but you will get the slide deck sent to you. We can realize quite some improvements. And there, from this, I just would like to point out that these improvements, actually the benefits, are not necessarily impacting directly the transfer pricing function. Yeah, okay, compliance is easier, etc. But you'll see a lot of the routine work and operations would be sitting elsewhere in your finance organization. So that's maybe an important point to align, and like, okay, keep the discussion with your colleagues in finance open and flowing. Yeah, and I think that more or less concludes it from my side. So I'll hand it back to the host.
Yes, thank you, Jonne. So we're slightly running over time. Apologies for that. So I will keep this brief. Our upcoming webinars in this overview. If you are interested in operational transfer pricing, and you likely are as you are in this webinar, then our webinar on February 11 is most interesting. In this webinar, we will zoom in further on the data gathering part and our software solution Coperitas that can serve basically as engine for your operational transfer pricing journey. There will be some overlap with this webinar on the data gathering part, but it will be more practical and focused on Coperitas. You may already register by sending a brief email to qgacademy@quanteurglobal.com. Next slide, please. Then, to conclude, operational transfer pricing gradually has increased in importance. And basically, as Jonne also pointed out, you cannot do without it. A solid process reduces risks, costs, and time spent and provides insight. There are multiple organizational, technical, and technological challenges. And independent where you are in your automation journey, it is always beneficial to start exploring. Our advice is to start with an exploration phase and develop step by step to gain momentum, also in the organization. To kick off your operational transfer pricing journey, we have a special offer for those in this webinar. An exploration meeting of 2 hours, including preparation from our end, and as deliverable, an overview of potential improvement steps. We offer this now for €250, and please send an email to Tim, John, or myself to start your operational transfer pricing journey. A couple of questions have come in. We will answer these separately. Feel also free to reach out to the email addresses on the slide if you have any other questions that may have come up. As said, it would be our pleasure to, and in our experience with other clients, also very beneficial to set up the exploration meeting. For now, we would like to thank you all for joining our webinar, and we hope to welcome you again on our upcoming events. Thank you.